Hey,
There
Walter,
he
how
is.
you doing?
What's going on?
Hey, what's up, guys?
Not too much. We're just talking about the Apple Intelligence write-up by Mark Gurman and Bloomberg. Did you get a chance to read this
I think
today?
we should take Apple private, slap, then go out for a new fundraise with a AI multiple.
New
Suddenly a
fundraise.
$20 trillion.
$20 trillion company.
I have not.
Easy.
I haven't seen it. What did he say?
I mean, it's just like a full accounting of all the different moves that happened internally to set Apple up for a revitalized Siri. Of course, Siri launched in 2011, 14 years ago. 7 years ago, they bring on John Giannandrea from Google. So he's been working as the head of AI at Apple for 7 years. Then they launch Apple Intelligence last year with the iPhone 16. And it's still not rolled out to the point where they originally demoed. And so the obvious question is like, what is going on? Daring Fireball had that piece, something is rotten in the state of Cupertino, that kind of rattled everyone. And there's just endless questions about. So now Mark Gurman's digging into like, okay, what actually happened? Who made what decision? Because the billboards went up that said Genmoji's available, but it wasn't available. So there's obviously some sort of disconnect at Apple between what's available and what's not. And it seems like a lot of it comes down to the fact that software can be shipped iteratively, and that sets you up for a very different culture than hardware, which either the iPhone is ready for Christmas or it's not, and the company goes bankrupt that year, basically. And so it's very clear that the hardware teams at Apple and the supply chain teams at Apple are incredible. And their entire cadence and everything that they do with Foxconn and everything they do with all of their suppliers is designed for like,
it just comes down to generative AI is inherently imperfect.
Yep.
And Apple's culture is a culture that celebrates perfection.
Yep. And so
those two things are at odds.
You'll never be perfect with it. Anyway.
Yeah.
Can you introduce yourself a little bit? How you doing?
Yeah. No, this is actually a story that's kind of made it into our household a little bit.
Please.
My wife and I don't really talk about tech, but her dad my father-in-law was a tech analyst on Wall Street, actually. And he was a Chinese guy on Wall Street, when there weren't very many Chinese guys.
That's cool.
Let's go.
He quite wisely invested in Apple,
Nice.
I don't know, 20, well, not 20, maybe 30, 40 years ago. So now it actually, he invested in Apple on, for my wife, and now it actually makes up a disturbingly large part of our family net worth. So she was like, "Hey, what's going on
That's
with Apple's
amazing.
rollout, Apple Intelligence?" I was like,
Can you break this down for me?
Should
I be bullish, bearish? I don't know.
I mean, the bull case is that it's LVMH for consumer electronics, and they can mess a lot of things up, and it's still probably roughly a $3 trillion company.
Exactly. Like the worst case is that Apple has no play in AI, no AI products, but they still have the best device to run them.
The next platform.
Yeah. Or, Google won search. Like search happened after Apple existed.
Yeah.
They just lost that entirely, never really built a search engine, still made money off of it.
$20 billion a year.
Yeah, it's fantastic. But anyway, what's on your mind these days?
Give a quick intro for those that are unfamiliar.
Yeah. I'm Walter. I'm the founder, CEO of Sacra. We publish research on startups, mostly focused on growth and pre-IPO companies. One of the, what I think the easy way to describe it is one, while like a PitchBook and Crunchbase, they cover like 3 million companies. We cover roughly like 300, and we try to go deeper on those companies. Some of our early customers are, we have people who subscribe directly to our research, but we also have an API product where some of the top secondary marketplaces ingest our research and sort of embed it into the marketplace experience. Because there's such a lack of information on, private companies. So like NASDAQ Private Market, EquityZen, Augment, Caplight. These are some of our customers.
I have to ask, just because it immediately popped into my head, how do you think that Notice selling common, do you think? Because when they were positioning those Anduril shares, I don't know if you saw this, they said there was like no fees, something like that. And I was just wondering how they could have positioned a product like that, and maybe you didn't follow, but
Yeah. Actually, Notice is one of our customers too.
Yeah.
We kind of slot them in actually. Well, so they only recently started doing secondary. Before they were like kind of like a broker marketplace, and they also have a data product.
Yeah.
So I actually didn't follow what they did with Anduril, but I'm assuming I think it was like the first deal they did coming out of the gate. So I wouldn't be surprised if maybe it was there was something special about it.
Yeah.
Interesting.
Yeah. That makes sense.
You're responsible for that insanely viral cursor chart.
Yeah. I put in my investor update. Highlights went viral with cursor.
Yeah.
Lowlights saw no benefit.
Yeah, the pain of
cursor probably made this, and they just put some random logo.
I think the ROI of viral tweets is almost zero.
Yeah,
it's actually crazy. It's
yeah.
crazy.
I mean, you've had a tweet get like 100,000 likes,
150,000
you
likes.
got like 100 followers from that or something.
Probably more than that, but it's
like
also
very
like
little.
low like followers that are not like part of your like actually engaged with what you're doing.
I talked to somebody who was like, YouTube videos are like TikToks. When you just see some like viral content, it's very much like graffiti in a bathroom, in a public bathroom. Like everyone sees it, but it doesn't really stop anyone. I wouldn't put the cursor chart in that camp though, because it really did start like a pretty significant conversation. Maybe it didn't benefit you specifically, but there was immediately this discussion of like, how durable is this revenue? Cursor's obviously gone on even to do, I think they're like 300 now or something like that. They're obviously ripping. It's a very special company, but for a lot of these companies that are racing to these new milestones, it does feel like there's rumors of churn. Have you seen any data on that? Is that something you're trying to track? Have you been able to plug into any of like the credit card data sources to understand more about the durability? Because if you're really going to underwrite this against this crazy growth, you probably have to think about not just market size and where this caps out, but also the churn.
Yeah. I mean, I think most of these products have relatively high churn, but the velocity is just so high. And I mean, proof is in sort of, they went from 100 to 200 to 300 pretty quickly.
Yeah.
But I do think like the whole AI coding, with the acquisition of Windsurf, by OpenAI, I think, it's probably sort of past peak or getting to sort of peak and past peak. And there'll be some consolidation, and it'll get it'll start, and then some of the churn will start to take its toll.
Yeah. How are you thinking about the AI coding market now, post Windsurf acquisition, post Codex launch? I was, there was a little bit of chatter about like, oh, well, like if OpenAI is launching Codex, why'd they buy Windsurf? Like, where does this position? And I was kind of working through it. Like, for the consumer, you can go to 4.0 or 0.3, ask it to do something, and it could wind up writing code for you, and you didn't even ask it to write code. It just did that to get you the answer. The example I gave was I wanted to know the height of a table in a picture, and it just wound up running a bunch of like image processing code in Python just to calculate that and count pixels up. It's kind of crazy to watch, but it probably wrote like 5,000 lines of code just in one prompt. I didn't ask it to write code. Then you have Codex, which is maybe a little bit more prosumer. You have access to a repo, you bring Codex in, but it's still in the consumer facing app. There's a button right there like Sora. And then Windsurf is for more of the professional, someone who's hands on the keyboard writing code all day long. They need a souped up IDE. And then there's bottom up adoption in the enterprise with people just signing up for codes for Windsurf or Cursor, and then the seats growing kind of organically. Then there's top down, like what's happening with Cognition and Devin, where they're kind of going very enterprise first. But how are you seeing the market shape up? Does that feel roughly correct to you based on what you've seen?
Yeah, I think like the easy answer is that, it's just happening on every level.
Sure.
Just having a play on every, on sort of every use case. And as you kind of point out, that there's a sort of core, which is that being able to write code is part of being able to solve reasoning problems, do things in the digital world. So it's not just, so it's both this sort of application, things that you do to code, and also it's part of this sort of underlying infrastructure that it powers, this type of action.
Yeah, I mean the the very simple napkin math on how you make these valuations work and why there's so many different companies. I just had 4O do like a little bit of research. There's, as of 2023, the U.S. employed 1.6 million professional software developers. Median annual wage was 130,000. Works out to fully loaded, their comp is more like 180,000.
Yep.
Works out to $293 billion annually.
Wow.
So it's like,
yeah, make them 20% more efficient, charge 10% of that, make them, like save on
and again,
costs
as engineer output increase,
as
the output of an individual engineer increases, you might have a company say, hey, we're going to actually build software now because we can hire one person for $180K a year and they can do the work that a handful of engineers would have been able to do. And that enables us to, so anyways.
Are you dividing up like the startup market map into sectors? Andreessen, they kind of fractured their funds. They have American dynamism, bio, consumer, crypto, enterprise, fintech, games, infrastructure. They really have so many different verticals. Do you think about it that way? Or are you just looking at growth and pre-IPO and the actual business model doesn't matter as much?
We do a little bit of that, but we don't really, that's not the main driver for us. The main thing for us is like serving the customers that we have. And a lot of the customers are, secondary marketplaces. So for those folks, like the coverage, really centers around the handful of pre-IPO companies that actually, have some kind of, secondary trading volume, things that people want to, people are actually buying and selling in secondary versus, and some like long tail. So that basically includes like pre-IPO and then fast growing AI startups.
Got it. So, are you responsible for those charts of like the hottest secondary stocks, or is someone else, and then that drives business for you? Like how, like we see these every once in a while, and they kind of shift around. Where does that?
Do you ever do deals where you actually ask the marketplaces to give you back data as like part of a deal, just so you can kind of get insights on what's happening across platforms?
Yeah, for sure. So we help, we work with some of the places to make something like that. So we do with Augment, which is a secondary marketplace. We do, we work with them on the Augment Power 20. And there are some other ones like the Setter. Setter is like a secondary, I think they're a secondary broker that they produce a list. And, basically all these secondary marketplaces produce some kind of list. And then there are those who are like industry ventures who do a lot of secondary. And as part of collaborating on some of those lists, we get data on
what is special about the structure of secondary brokers that requires you to slot in, or requires them to look for something that looks a little bit more like an equity research, like sell side analyst report, versus a primary bidder who's doing pricing, a tier one venture firm that might, I don't know how much they use your reports, but I'm interested to know kind of just structurally how secondary brokerages underwrite deals differently than just the normal venture firms that we might be familiar with.
Yeah. So secondary marketplaces, a lot of them, whether for retail or institutional, a lot of these folks who are participating may or may not have very much information, on the companies. And for the marketplaces themselves, they need, if you can frame it slightly differently, they need content. They need, collateral to engage, buyers and sellers. So that's where some of the research comes into play. Secondary marketplaces, a lot of times, sometimes they invest primary and they have direct access to information, but then there's a whole universe of names that they could potentially be interested in that they don't have access to information for. So it's useful to have, us come in and, help support their research efforts. And that's similar for venture funds, although venture funds have, tend to have some more data. But we do work with like a top tier, like early stage venture fund, and we help them. One of the things that they're very big on is understanding trends. And so let's say they saw a bunch of digital health companies, in 2015 or whatever. They want to see how those have played out today. And because they're not like multi-stage funds, they don't have necessarily direct information on how those companies they passed on, are doing today. So we work with them on that's
a funny customer experience, a venture fund logging in to 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 your platform and being like seeing a bunch of companies they passed on that are doing hundreds of millions of ARR. Let's talk about a couple of specific categories that we had talked about offline. So one, I would love an update on the sort of banking as a service platform companies. You had some interesting coverage of Column as well as Lead Bank, both of which Column's interesting. I hadn't heard or seen anything from them in a while. You described them on the site as a mom and pop banking as a service platform, which they're bootstrapped, right? That was kind of the joke.
Yeah. The founder is a husband and wife team.
Yeah.
And it's William Hockey and his wife Sarah, and they funded it through Plaid Secondary. They bought this bank and then they sort of retrofitted it with an API. So they're a vertically integrated API and bank, and right now actually they're Mercury is in the process of moving off of Evolve onto Column. Actually Mercury this morning shut down the Sacra bank account because we didn't do some verification. There's
brutal.
Yeah, so much verification happening. But it's a good sign because I think Column's standards are a bit higher. So it's good. But they have Mercury and Brex, basically the two best B2B neobanks. So they have to do public filings through the FDIC, because they're a bank. So
what's the deal? Do they have to do not? I imagine if they're a chartered bank, they have to do a bunch of stuff that's not neobanking, right? Isn't that kind of the nature of operating a bank? You need to be diversified. You need to be de-risk a little bit. You can't just be doing one industry, one type of customer. Is that true?
Yeah. They have like a funny, they have like another website. They have like Column Bank, and then they have like Chico, community
credit
bank
or something. Yeah.
So it's pretty funny to see kind of like the two faces.
Last question, we'll let you get out of here. Data sources. I mean, how much of this is like investigative journalism, just like talking to employees? And we were looking at that Apple report.
Yeah, the alternative is a company actually wants analysis on their business.
Or there's like credit card data that's floating out there. There's other data that's out there. Or just like pitch decks, like fly around Silicon Valley all the time. You might just get your hands on one if you're just connected. What are the most reliable data sources? What's the weirdest data source that you can pull from or that you can share? Are you looking at satellite data like a hedge fund? Looking at how full are the Walmart parking lots? I always love that example.
Yeah. Number one is data sources are for rock. We just.
Oh yeah.
Expect a meme coin from Socrates.
Yeah. Avoid that at all costs.
Yeah. I think like one of the big kind of sources, that is kind of novel and new is LinkedIn. Every sales and marketer, is claims credit for their ARR growth, so it's easy to track sort of like the ARR growth of your average
interesting
company through the accomplishments of the SDR.
That's cool.
And then otherwise, we collect from a wide variety of sort of public and private sources. As Jordy, you mentioned, like companies do share data with us. We work directly with companies. And because of especially some of these capital intensive companies, they're constantly raising money. And so there's a lot of SPVs, there's a lot of like syndicate leads, there's a lot of people out there with, access to data, and these things, get shared around a lot.
Very cool. Last question on my side, and then we can make this a recurring thing because I think you get a bunch of interesting data points. At what point is a company so cooked that you just stop covering them because they're not? You can imagine if a company's raised $300 million and they're not growing anymore and they're subscale. Like at some point, the company is just not necessarily worth anything, or even if they were to sell, and maybe they stop being a good target for coverage.
Yeah. Well, we're techno optimists. Always believe in the
remain bullish.
It's never too late. I think the best example of this is we wrote this semi-viral report, Ramp Passes Brex. Delian shared it around a lot, obviously. At the time it was a little controversial, but I think obviously, Ramp has continued to scale like crazy. But like for Brex too, I mean, I think at the end of the day, like it's a big market, big opportunity, and I think Brex is going to do fine. I'm actually possibly one of the small handful of people in the world that's both a Brex and Ramp shareholder, and I can tell you about that next time, very incidentally. I think like they're both going to win, and so I think 300 million. They still got a shot.
That's awesome. Well, thanks so much for stopping by.
Thanks, Walter. This was great.
All right.
We'll make it a regular thing. Cheers.
Thanks, guys.